Hey, this is Jordan, and this video is being recorded on Wednesday evening, October 20th, 2021. Thank you so much for joining me. Please like, comment, and subscribe if you're watching this on YouTube. And in this video, I'm going to talk about the single bullish catalyst for gold stocks. And I posted this video earlier, but there were audio and video issues, so I apologize for that. So I'm re-recording. I'm going to try and run through this quickly. Okay, so just one chart in this video, and we have the Fed funds right there at the top, gold, and then two gold stock indexes at the bottom. The first is the Barron's Gold Mining. Second one is the S&P TSX Gold. Because historically, the performance of the two, they differ a little bit in the 60s and also in the 80s and 90s a little bit, so I like to look at both if I'm taking a historical look. But in recent videos, I've talked about how a new Fed rate hike cycle is very bullish for gold, but it's also very bullish for the gold stocks. Just look at the start of the last 1, 2, 3, 4, 5 rate hike cycles. The gold stocks made a pretty good move in all of those cases. Circling back to gold, a couple things I want to point out. The start of the last 4 rate hike cycles, gold had an average rebound of 27%. Now, in 2004, when gold was still correcting, it did its high in 2004, which was kind of a false high. That was a 20-plus year high for gold. One of the other 4, gold made a 2-year high. In the other 2, gold made a 2.5-year high, based on the move after the rate hike. Now, one move, when the Fed hiked rates at the beginning of 94, the move started in early 1993. So that there is a historical precedent for the sector rebounding before, well before the rate hike. And so I don't know, is that the low that we've seen in recent weeks, is that the start of, the rate hike move? I don't know. My guess would be no. But, it's possible, and time will tell. But back to the history of gold, 27% rebound. And then you could say most cases it made a 2 or a 2.5-year high based on that move. We're just looking at the last 4. So if we think about the end of, towards the end of next year, so, about 12 months, maybe 13 months or so, for gold to make a 2-year high, it's trading about, it would be trading, 1900 or 1950 maybe. To make a 2.5-year high, gold would be trading at, 1975 and perhaps close to 2000. And also we have to calculate, if you even calculate a 20% rebound from the lows in the last couple weeks, I think that gets gold close to the all-time high. So, the history here makes a strong argument that based on the Fed starting rate hikes, let's say around the middle of next year or, late spring, whatever, then, gold is going to rally to, I think, at least 1900, maybe even 2000. I've just gone through the history there and done the calculations. So, that's based on the correction that we've had now. That's pretty encouraging. And obviously, that would be really, really encouraging for gold stocks. And so if we're just looking at the last 5 times the Fed hiked rates, gold stock, it was actually a higher probability for gold stocks to rally than gold. Not by much, but, in one instance, it was better for gold stocks than gold. So that's what I want to point out here is the Fed. And the reasoning why the Fed hiking rates is bullish for precious metals, there's 2 reasons in my opinion. The first is that going into the rate hike, other than 1993, going into the rate hike, the market discounts that move. They discount the rate hike, they discount tighter policy. So you get the kind of rebound opposite effect, sell the news type effect. And then the other reason is the Fed hiking rates. That's an admission that inflation is going to be a problem and that there's a risk that inflation will accelerate. And we know that historically, other than one time, 1979 to 81, other than that one time, the Fed is always behind the curve. They never hike rates fast enough to contain inflation. They hike rates, and it's just usually a matter of time before things roll over. So those are the two reasons. So even though gold stocks, people are making fun of them on Twitter, they've had a very hard last 12, 15 months. They are, based on this history, they, as well as gold, are set up to have a good year next year, in my opinion. And that could potentially lead to the breakout in 2023, the potential breakout, gold going above 2,000, 2,100. And for gold to make that big breakout, obviously it has to outperform the stock market. The stock market looks like it's going to be making a new high again soon. So, things are going well there. I mean, stocks and commodities are still outperforming gold. And so we have to get to the point where the market's worried about stagflation, because inflation in high commodity prices is starting to impact growth. It's starting to impact psychology. And that's what drives capital moving out of those areas and back into precious metals. And at the same time, when you have fears of stagflation, growth is coming down, inflation is still present, that hurts the stock market. So that's the combination that is going to lead to the next big breakout in gold. And it's going to take some time for that to happen. And so that aligns with my guess right now that 2023 could be the year of the big breakout in gold. But with that being said, based on this rate hike, we either just made a low in the last couple of weeks for the sector, or, we'll make a low maybe sometime, middle of next year based on the history of rate hikes. So that's my take on things right now. I hope you enjoyed this video. Follow all my work at TheDailyGold.com. Leave me a comment. Let me know what you think. Consider subscribing to my newsletter if you're not already a subscriber. If you are, I thank you. And with that said, thank you so much, and I look forward to talking to you guys again in the next video.